All right, we will be doing an example on Debtors Journal. So far, we have done the cash journals. Under cash journals, we've got the cash receipts journal, and then it is the cash payments journal, and the last one was your petty cash journal. Under the cash receipts journal, we record all the monies that we have received. Under the cash payment journal, we record money that goes out. It's an outflow that we are paying to different parties. And petty cash, we simply record small amounts of money paid. This journal here is different because it doesn't record any transaction that involves money. In the debtors journal, we record transactions that results from the sale of goods on credit. Whenever we sell goods on credit, that transaction will be recorded in the debtors journal. The person that buys from the business on credit, we call them a debtor. That's why we call it debtors journal. I did explain the under definitions as to what debtors are. Debtors are simply people or customers that bought from the business on credit. They bought goods from the business on credit. So whenever we sell goods on credit, that transaction will be recorded in the debtors journal. Here we're dealing with VC Clothing, which sells goods for cash and on credit. On 1 March 2021, the balance of their two debtors, so VC Clothing only has two debtors, and those two debtors are N. Dlamini as well as U. Kubeka. Now, these are the amounts that these two debtors are owing us. All right. Now, each debtor will get a breakdown every month of the transactions they've entered into with the business. And that breakdown, we call it a statement of account. But from the business side, it is called the debtor's ledger. Basically, in the debtor's ledger, we simply record a breakdown of how much each debtor has bought from the business on credit, okay? Now, those two amounts that I've got there, I will simply record them in each debtor's account. I will start with N. Dlamini. Please note that N. Dlamini is our debtor and has a balance that he still owes us in this ledger account, debtor's ledger account. So it has the invoice column, the day, details, folio, debit, credit, balance. The debit side will always increase whenever the debtor owes us more. And the credit side will only increase when the debtor owes us less. So whenever the debtor owes us more, that transaction will be recorded on the debit side. And that is because debtors are assets, and all assets increase on the debit side. That's why we're going to record that on the debit side. Okay. So I'm going to write the 1st of March 2021, and then I will have balance brought down from N. Dlamini. N. Dlamini owes us 1,500. Let's see how much Ukubeka owes us. As per the information, Ukubeka will owe us 800. So we will write it as balance brought down, and this is all at the beginning of the month. Let's go to the information sheet. And then it says that we are required to enter the following transactions into the debtors journal of VC Clothing, close off the journal and post to the general ledger and the debtors ledger. Remember, debtors ledger is where we break down how much each debtor owes us and how we got to that final amount, starting with the opening balance balance. And then it says information, balances on 1 March 2021. Debtors control is simply 2,300. Remember, we only have two debtors, which is N. Dlamini as well as Ukubeka. So when you add the amount, it will give you the total amount of debt that is owed to you. And in this case, we are owed 2,300. Please note that debtors control is an asset account, and we are going to record that in the general ledger under debtors control. The debtors control ledger account falls under the statement of financial position account section, i.e. the balance sheet account section. This account increases on the debit side whenever we sell goods on credit to the customer. It decreases on the credit side whenever the customer makes payments. It increases on the debit side at selling price when goods are sold on credit to the customer. It decreases on the credit side when the debtor has repaid that debt. This is an asset account, that's why it increases on the debit side. The balance we have at the beginning of the year, not the beginning of the year, at the beginning of the month, we are going to write it as balance brought down on the 1st of March. Remember, the general ledger is prepared every month. So this is the total amount of debt that is owed to us from last month by the debtors. In this case, it is Dlamini as well as Kubeka. They owe us combined, they owe us 2,300. Okay. I'm just going to do this. This is how you deal with the information. I know that this information, I'm done with it, so I'm just going to erase it. It has been recorded. And then it says trading stock is 15,200. Remember, this is the balance at the beginning of the month. Trading stock is an asset account. And since it is an asset account, it will increase on the debit side whenever the business buys more stock. So whenever the business buys more stock, this account will increase at cost price on the debit side. It will decrease at cost price when more stock is sold. So whenever we sell stock, it will decrease at cost price on the credit side. In this case, we still have the remaining trading stock from last month, which was 15,200. So we're going to bring it down here as balance brought down trading stock, and the amount will be that 15,200, which comes from the general ledger. All right. Now, after recording it in the general ledger, I'm just going to record all the transactions here. I will go to cost of sales. So far, I am done with trading stock, so I will simply scratch that out. And then it says cost of sales is 11,000. Please note that cost of sales is the cost of goods sold. Cost of sales is simply an expense account. It goes up whenever goods are sold, meaning that it will go down whenever goods are returned to the business. Here we'll have cost of sales. Since it's an expense account, it goes up on the debit side. It goes down on the credit side. This is an expense account. Therefore, it goes up on the debit side whenever we sell goods. So far, in total, the cost price of goods we have sold will be 11,000. And this will be at the beginning of every month. Okay, that's how you deal with all the balances. Let's check the last balance. The last balance will be sales. So I'm done with cost of sales. The only balance I haven't dealt with thus far will be my sales. What is sales? Sales is income. Because sales is income, it'll go up on the credit side. Whatever you record in this ledger account must be at selling price. It doesn't matter whether you have sold the item on credit or you have sold it for cash. As long as you're selling, the sales amount will increase on the credit side. The sales account will increase on the credit side. Because it's a nominal account section, I'll just write it as balance brought forward. Now, let us go to each transaction. This is done now. I've recorded all the balances. Then it says that the following credit sales took place during March 2021. Please note that all credit sales will be recorded in the debtors journal, and all cash sales will be recorded in the cash receipts journal. I'm only going to do the first transaction and ask you to do the rest. And to get corrections to that, please check out the next video. On the 3rd of March, we as VC Clothing, we sold goods on credit to you, Kubeka. The selling price of those goods was 550,000. And the cost price of those goods is 450,000. We will record that transaction in the debtors journal. The debtors journal has the invoice column, day column, the name of the debtor. Under folio, you write the debtors ledger's number. So if Kubeka is debtors ledger number 1, you're going to write DL1. Then we've got sales column. This is the selling price of goods that we have sold. Then we've got cost of sales column. This is the cost price of goods that we have sold. Cost price simply means that the goods that we have sold, we have bought them for this much. Selling price means that we sold goods at this much. Okay. Now they said there is a debtors journal for March 2021. On the invoice, I will start by invoice 01. The day was the 3rd. The debtor is you, Kubeka. I so far don't know which ledger account, debtor's ledger account you, Kubeka will be, so I will leave that for now. Under sales, I'll put in the sales price of goods that have been sold, which is 550,000. And the cost of sales, I'll put in the cost price of the goods that were sold, which is 450. I hope I didn't say 550,000. It's 550 Rand. Okay, so we sold these goods for 550 Rand, but we bought them for 450. The reason why we recognize cost of sales is for us to make sure that it enables us to calculate the profit that we have made from each sale. So it's simply all about the matching principle. You will learn this later on. So whenever we sell goods, we write the selling price of those goods, but we also recognize the cost price of those goods to make it easier for us to calculate gross profit, which is just the profit from selling goods. It doesn't stop here. I am going to go to you, Kubeka's debtors ledger account. Remember, Kubeka is owing us 800 Rand. Will Kubeka still owe us 800 Rand after she has bought from us on credit? The answer is no. Because on the 3rd, Kubeka bought from us. We gave Kubeka an invoice 01. That comes from our debtors journal. Will it go on the credit side or will it go on the debit side? It will go on the debit side because Kubeka has bought from us. But how much are we going to put on that debit side? Are we going to put in 450 or are we going to put in 550? We are going to put in 550 because that is the amount that Kubeka owes us. We sold to Kubeka for 550. So that will be on the debit side. Will Kubeka's balance be the same? Will it still be 800? The answer is no. It has gone up because Ukubeka owes us more. Why does Ukubeka owe us more? Because Ukubeka bought from us on credit. So Ukubeka's account will increase by 550 from 800. You will simply take 800 and add it with 550. 800 plus 550 will give you a new balance that Ukubeka owes us. How much will that new balance be? It will be 1,350. How did I get that 1,350? It is 800 plus 550. Okay, I'm tempted to do the next one. Let me just do one last one and I'll leave everything to you. Here is another one. I think I might do it the whole thing. It says that we send, okay, all right, so I'm done with this transaction here. So the best thing to do is to cross it out. The next transaction says invoice. We send invoice 02 to N Lamini for goods which he bought on credit from VC floating for 980. So 980 is the selling price. And the cost price to that will be 920. So that is the cost price. And this is the selling price. So in the debtors journal, in which column are we going to record 980? And in which column are we going to record the 920? We will simply have the invoice number, which is invoice 02. Day will be 12. Data will be N Lamini. Sales will be 980 because that is the selling price of goods. And the cost price of the same goods will be 920. You don't stop there. You will simply go to the debtors ledger of N Lamini. N Lamini will owe us more. So this happened on the 12th. It was invoice 02. We will have DJ under folio. Are we going to record 980 on the debit side or on the credit side? Remember, you record it on the debit side if it results in N Lamini owing us more, and you record it on the credit side if it will result in N Lamini owing us less. Will N Lamini owe us more or will N Lamini owe us less? The answer is that N Lamini will owe us more. How much more? 980 more. The new balance will be 1,500 plus 980. That will give us 2,480. Okay. I'm done with that transaction. I am therefore going to cross it out. Okay. Let's go to the 26th. It says that we supplied merchandise to N Lamini for 2,500. The cost price of those goods were 1,500. A cash slip. A cash slip is a slip that we issue when someone buys from us for cash. For half the amount, was issued to him. A cash slip for half the amount was issued to Ndlamini, meaning that Ndlamini bought half of the stock on cash and half of the stock on credit. And the credit invoice for the remainder was issued. The credit invoice for the remainder was issued. In this transaction, you have to be careful because it means that half of this transaction will be recorded in the debtors journal and half of this transaction will be recorded in the cash receipts journal. We will record the credit portion in the debtors journal. I will start with that. I will have invoice 03. Date will be the 26th. The person that bought from us on credit in this case is Ndlamini. Remember, the total sales price was 2,500, but only half of it was sold on credit. So half of 2,500 will be 1,250, and half of the cost price, which is 1,500, half of that will be 750. We'll go with this 1,250. Again, this simply says that Ndlamini is going to owe us more. We will have 26, invoice 03, DJ. On the debit side, we'll have 1,250. Remember, the reason why we're putting it here is because Ndlamini bought from us on credit, and he bought stock worth 1,250. Add that 1,250 with 2,480, it'll give you a new balance that Ndlamini owes us, which is 3,730. The other half will be recorded in the cash receipts journal. How do we record it in the cash receipts journal? Under document number, I will put in CRT1. CRT stands for cash register tape. That's where we record all our cash sales. All cash sales will be recorded in the cash register tape. That one simply means cash register tape 1, because when we have completed a document, we'll have another document, okay? Now, in the cash register tape on the 26th, under detail, we'll just have cash sales. I will write cash sales or just cash. Under analysis of receipts, I will have 1,215. Remember, half of it was paid for cash, so we received half of it, which is 1,250. We received 1,250. It will go under bank as well as under sales. What will be cost of sales though? Cost of sales will be 750. This transaction ends here. I can't take it to the debtor's ledger because remember, debtor's ledger is all about how much a debtor owes us. The debtor doesn't owe us this, and Ndlamini doesn't owe us this amount. I would have actually put as details. Ndlamini doesn't owe us this amount because he paid for it cash. Okay. I'm going to go back to the information. It says that obviously with this transaction here, I'm done. Okay, I'm done with this transaction here. On the 29th, it says that issued an invoice. Invoice means that obviously this is a credit sale for goods sold on credit, okay? So we issued an invoice to Ukubeka for goods sold on credit. The selling price is 640 and the cost price is 540. So that will be recorded in the debtors journal. So in the debtors journal, we'll simply have invoice 04, it will be the 29. The name of the debtor will be Ukubeka. Under sales, we will simply have the selling price of goods sold to Ukubeka, which is 640. Under cost of sales, we will simply have 540. Since that is the last transaction, I will just add all of those up. Please note that this 3,420 represents the total amount that we got from sales that we sold on credit. And this 2,660 represents the total cost that goes with the goods that we have sold. So the goods that we have sold, we actually bought them for 2,660. And we'll come back to how we deal with that later on. I'm going to go to Ukubeka's account. And in Ukubeka's account, Ukubeka will owe me more, will owe us more. On the 29th, we'll have invoice 04. It'll be DJ. On the debit side, we will simply have the selling price of goods sold to Ukubeka, which is 640. 640 plus 1,350, it'll give us 1,990. Please highlight those two amounts. This amount and this amount. These two amounts represent the total amount that is owed to us by each of these debtors. Those total amounts, we are going to use them to prepare what we call the debtors list. Debtors list simply specified the total amount that is owed by each debtor. The first debtor, which is N Dlamini, which was in DL1, debtors ledger 1. Then N Dlamini owes us 3,730, and Ukubeka owes us 1,990. In total, both of them will owe us, in total, they will owe us 5,720. This is the balance that we need to have in our debtors control. Debtors control takes into account the amount that is owed by all the debtors we've got in the business. Okay. The following notes just explain what we've just done. Read through that, please. Okay. In the next video, I will simply be explaining general ledger account. Please check the next video out.